Hello, and welcome to Portfolio Matters Share Talk. In today's podcast, we will be discussing the Spanish copper miner Atalaya Mining, which has assets in Spain, but which is incorporated in Cyprus and listed in London. Now, before we get into it, Richard will read the disclaimer.
Thank you, Keith. Everything discussed during the Portfolio Matters podcast is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have a financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. A full disclaimer can be found at the end. Please tell us about Atalaya Mining.
Thank you, Richard. Okay, Atalaya Mining. This is its main asset, the Cerro Colorado mine in Andalusia, southern Spain. Now, it is copper miner with some assets which are also copper, zinc, copper, lead, and it's got a main mine and then development assets surrounding it and also in the north of Spain in Galicia. Now, it's listed in London, but incorporated in Cyprus, which actually will cause it some tax issues and dividends, which we will discuss. Okay, so the shares have had a good run this year, and the share price is currently around £4. The market cap around 560 million. It is now net cash, having paid off all the debts associated with funding the mine expansion, and it has just announced its inaugural dividend, which will give it a yield of around 7.2% just on that inaugural dividend. The forward PE ratio, according to Stockopedia, is around 5.6, but we will do our own PE calculation later. Now, in summary, I like this. It's the shares look good value. So we're going to estimate that it has a PE ratio of about 4.9 next year, and we'll go through that calculation later. And it has started paying dividends, and I don't think this is a multi-bagger in the vein of Rambler Metals, for example, or Phoenix Copper, but this is a steady business which will pay out good dividends and is cheap with a good margin of safety and exposure to a strong copper price. However, there are risks. The bottom line is its assets are in Europe, in Spain, and anything it does, it will face strong opposition from environmental groups, and their expansion plans in the north in Toro in 2020, their environmental permit was refused, and they're in the process of redesigning the development plan and applying for a new environmental permit. But as you will see as we go through, they will be opposed by environmental groups every step of the way. And that is just a problem in Europe. Okay, so this is the share price. It used to be called EMED, but renamed itself in 2015. And if we go through the history, in June 2015, it raised 65 million at a then price of 4.75p in order to restart mining at the Rio Tinto mine in Andalusia. Then in April 2016, it had to temporarily halt production due to the tailings storage facility, and that was lifted the next month, and there have been no problems since, but something to be aware of. Then in July 2016, there was a 30-for-1 share consolidation. Now, in 2017, there was a court case with Astor Management, and this all relates to the funding for the Rio Tinto mine and whether the way Atalaya managed the funding of the development precipitated the payback clauses to Astor. So Astor were demanding that they be paid back the money they had lent to Atalaya the moment the mine had funding. But Atalaya funded the mine development through an intra-company payment, so payments between two subsidiaries, and that was deemed by the court not to constitute a precipitating event. And anyway, litigation is still ongoing. Then there's a further fundraise in December 2017, and in September 2018, a local environmental group successfully challenged the environmental permit for the Rio Tinto mine, but the court reiterated the validity of the environmental permit, but accepted that there had been procedural deficiencies in the granting of that permit. So mining was not stopped. And in August 2019, the expansion of Rio Tinto to 15 million tons per annum was announced to have reached full mechanical potential. Okay, so in January 2020, the Touro project in Galicia received a negative environmental impact assessment, and they are resubmitting their development plans. And then in January, 30th of January, the Junta de Andalusia issued a new environmental permit for Rio Tinto. So there are no issues going forward for the Rio Tinto mine. But then obviously COVID happened in March, and that stopped production for, looks like only a week actually. Now in September 2020, they announced they were going to develop a 50 megawatt solar plant to generate power for Rio Tinto. And they then acquired Masa Valverde, which is close to Rio Tinto. It's only 20 kilometers away to the southwest, and is one of the largest undeveloped massive sulfide copper deposits in Spain. But they got it for only 1.4 million euros. And as we will see, the reason for that is it's quite deep, and it will be difficult and expensive to develop. Then in May 2021, that's this year, it acquired 12,000 hectares of exploration land to the east of Rio Tinto. And on the 27th of October, which was very recently, announced an inaugural dividend of 29p, giving it a yield of 7.3%. Okay, so quickly, why are we interested in copper? Richard.
Thank you, Keith. There's a chart of the copper price, which shows that it's gone up since 2002. It has probably gone up in price by a factor of 10. Having leapt up in sort of the late 2000s, it then came back off, didn't it, to the mid teens, and where it sort of hovered between $2 or $3 a pound, and now it is launching itself upwards and consolidating again at around about the $4.50 a pound. This is a chart of Goldman Sachs forecasting historical and the historical price and their forecast price. And they had an old Goldman Sachs forecast that basically said, this is in dollars a ton, basically said the price wasn't really going to go anywhere between 2020 and 2025. And they now have a new price, which says a new projection, which says the price is going to double effectively between 2020 and 2025. And the reason for that is the increased demand because of the ESG, turning the economy green, use of electric motors, greater use of electricity, wind generation, and so forth. And there is a great deal of pent-up demand as we move from a fossil fuel-based economy to a green economy. Goldman Sachs say that if the price of copper goes up to $15,000 a ton by 2025, then the above ground stocks will effectively remain fairly constant where they are. If the price stays at the current price, $9,000 a ton, then effectively stocks will be almost entirely depleted. And if the price is somewhere in the middle, there will be an almost entire depletion, but it won't occur until about 2026. Goldman Sachs basically saying the price has to go up in order to slightly, I suggest slightly reduce demand, but significantly increase supply. And this is a graph showing the different inventories at different exchanges. And you can see that the exchange inventories are very low by historical standards. So the copper demand per year from green sectors is rising, projected to rise exponentially from about 1 million tons a year now to 6 million tons a year in 8 years' time. And it's a mixture of solar, wind, electric vehicles, and the generation, the transmission capacity, the charging points. So we can see that green demand is projected to rise significantly. As a percentage of total demand, green demand is relatively small, but also is rising fairly rapidly, but it's going to be projected to be around about 16% by 2030. Currently, it's about 5%. So although green demand goes up very significantly as a percentage of total demand, it's a relatively small factor. But the problem really is that copper mine supply is going to be falling. There's been very little investment in new mines, great difficulty in getting new mines permitted for a number of years, and this is going to basically come through as negative mine supply growth from around about 2023, 2024, whilst we have a time of increasing copper demand growth. So we have the perfect storm of increasing demand and reducing supply, which is why effectively Goldman Sachs says the price has to go up, because the price has to go up to encourage more supply. And the copper global balance is basically saying that currently new supply is expected to exceed demand, but by 2025, new supply will not be able to meet demand by a significant amount, by 300,000 to 400,000 tons of copper a year. So the projection is that the copper goes into a deficit over the course of the next few years, and then unless there's a very significant price increase, it will remain in deficit. And what that means is the price increase has to occur before the deficit is resolved. So the price increase needs to come before the deficit resolution.
I would say that there are a few big mines coming on, what is that, in 2023, which causes a surplus for just those 2 years. And then we're into deep and expanding deficits.
Yeah. And that basically is the investment rationale for copper mines in a nutshell.
Yeah. Thank you, Richard. I should also say that we did a special on copper, and which went into this in some depth, and we will provide a link in the description to this podcast. Okay, so the Iberian Pyrite Belt is formed from volcanic massive sulfide deposits. Now, when we talked about Phoenix copper, we discussed copper porphyries, which are enormous copper deposits which are caused by volcanic activity. And these volcanic massive sulfide deposits are also caused by volcanic activity, but in a different way. So, whereas porphyries are caused by subsuming tectonic plates, VMS deposits are formed on the ocean floor. And there are loads of them. There are about 900 known VMS deposits, and they average around 17 million tons of ore at 1.7% copper, 3.1% zinc, and 0.7% lead. Now, you remember when we talked about porphyries that they were enormous. The resource was much larger, but at much lower copper concentrations. you're talking about below 1%. So these are smaller, but with higher copper concentrations. And VMS deposits are found all over the world. And all these charts are from the Visual Capitalist. And you'll see that the Rio Tinto mine owned by Atalaya is actually mentioned here. And the Iberian Pyrite Belt is one of the main known VMS formations in the world, but there are others in Canada and the US, and they are being formed at the moment. So the blue dots are where they believe VMS formations are being formed on the ocean floor at the moment. And you'll see that they follow the tectonic plates on the ocean seabed. Now, the way all copper deposits are formed is that you have to have the copper in a large volume of rock dissolved in water and then concentrated and deposited in a concentrated form. And the way that happens is using superheated water and volcanic activity. So VMS deposits are formed on the ocean floor. And what happens is that water makes its way through the ocean floor until it hits the magma, where it's heated up. It then dissolves all the metals in the rock, and it's superheated and comes out of the bottom in small volcanoes called black and white smokers. And fluids that come out through the black and white smokers are superheated, but it's on the ocean floor where the water temperature is about 2 degrees C. And the superheated water is then rapidly cooled, and the copper sulfides are precipitated out of solution and fall onto the ocean floor. And then over the course of millions of years, the seabed is then transformed into land, moved onto land, and there it forms a copper mine. And these are examples that you may have seen on nature wildlife programs. So the one on the left is a black smoker, and that is what we're interested in because the black smoke is caused by iron sulfide, and VMS deposits are sulfide deposits. And we'll show you in a second copper iron sulfide. The white is a different form of smoker, and that does not contain copper. That contains barium, calcium, and silicon. So this is chalcopyrite, which looks very much like fool's gold and is one of the main minerals found in VMS deposits. Okay, so a brief nerdy aside on the chemistry of VMS deposits, because I did a chemistry degree and I'm quite interested in this. So at the bottom we have the magma, which is at 1200 degrees C, and then the water, the ocean, is in blue, and what you get is the water seeping through cracks in the ocean floor, and as it approaches the magma it heats up. Now what is interesting is that various minerals actually have reverse solubility. So as the water heats up, they become less soluble. And so they precipitate out of solution. And that happens to calcium sulfate and calcium carbonate at around 150 degrees C. And then as the water heats up further to around 250 degrees C, magnesium hydroxide compounds form, and they fall out of solution as well. But then the water becomes superheated and starts dissolving anything it comes in contact with that is soluble. So it picks up calcium, potassium, lithium, copper, zinc, and lead. And you'll notice that VMS deposits that Atalaya are currently exploring have high concentrations of copper, zinc, and lead. And then the superheated water then comes out through these black smokers, hits the cold water, and these sulfides their solubility is very temperature dependent. So as they cool, they come out of solution and are precipitated onto the ocean floor, where they form essentially a mineral rich layer, which is what we are now mining. Okay, so back to...
That is actually very interesting, Keith, because you come across these things as mines all over the place, and it's fascinating to see how they actually evolve.
Well, thank you, Richard. So moving back to Atalaya. So this is an overview of their assets. They have the Cerro Colorado open pit, which is what they are currently producing from. They have nearby the San Dionisio and San Antonio deposits, but those are very early stage. So they're doing a preliminary economic assessment and a feasibility study. So they're nowhere near production. And then they have the Masa Valverde project, where they have been doing some exploration drilling, and we will show you the results in a bit. But if you look at the diagram at the bottom here, it shows that the ore body is deep. So you'll have to mine that. That is not an open pit, and that will be expensive, and the permitting, I can imagine, will be quite difficult, because as Richard was pointing out earlier, mining it is going to create a hell of a lot of tailings. So in environmentally conscious Spain, what is the appetite for permitting that? Then in the north, you have the Toro project, which is again in the permitting phase. And as we discussed earlier, their environmental impact assessment was negative. So they're submitting their plans. And this is the project pipeline. So they're producing from Rio Tinto. They're doing the feasibility study from Toro. Now the ELIX system. Currently, Atalaya produce copper in line with many of the other copper companies that we have covered. So they use the bubble concentration method to concentrate the copper and produce a concentrate, but they then ship the concentrate 75 kilometers away to a smelter where the copper is extracted, and they pay smelting fees. The ELIX system, they're saying, is a new system that is experimental, and they've had initial success with, and they're aiming to scale up to an industrial process. And they're saying that will allow them to produce copper cathode on site, thereby cutting out the smelting fees and cutting out the road transportation, all of which is good news, but it's a new process. And when I tried to dig further into the ELIX system, I essentially couldn't find very much. It was developed by Eva Maria Lane, and this is her LinkedIn profile. And you'll see that prior to working at Lane Tech, and that is her second job, she was doing R&D for Atalaya at Rio Tinto. And prior to that, she was at Cambridge University. So, the whole ELIX project seems to have originated from work done at the Rio Tinto mine itself. And this has not been commercialized elsewhere, and is very much a new process. So frankly, we will have to just wait and see what happens. Okay, so this is what their priorities are now and for the future. And they're looking to re-domicile the parent company to the UK in the medium term. And that would be good, because being domiciled in Cyprus, they have various withholding taxes, which we will go into, and seems a very tax inefficient structure. So the mine is in Spain, but all the trading of the copper is done via the Cypriot subsidiary, and profits are paid from there. And that's very tax inefficient. Then going forward, they want to become a multi-asset producer, expand their footprint, and move to the main market they're currently on AIM. Okay, let's talk about the Rio Tinto mine. So we are down in the south of Spain near Seville, and there are lots of other big copper mines nearby, owned by Trafigura and First Quantum, for instance. And the Rio Tinto project has to transport its concentrates by road to Huelva, he says, attempting to pronounce that, where it is smelted at Atlantic Copper, which is owned by Freeport-McMoRan, and they process 15 million tons of rock per annum and aim to produce about 55,000 tons of copper in 2021. And they've got a mine life of around 12 years. And this is the production history, and since starting up it has gone through various expansions, but we are at the maximum now. So they've gone from processing 5 million tons per annum in 2015 to 15 million tons by 2019. And actually I'm very impressed by the management and the speed with which they have done this, actually. So they invested in the business and took on debt to expand production, and they have now paid off all that debt. But the copper grade is quite low, but the strip ratio is actually also quite low. You only have to remove 1.8 tons of waste rock to get to 1 ton of ore. If you listen to the CEO in interviews, he discusses how when they started operations at the Cerro Colorado mine, it had a mine life of 12 years, and that was in 2016. And 5 years later, it still has a 12-year remaining life because they have expanded the resource base. So that's all good news. And this is their tenements in the surrounding area. Now, the red here is Cerro Colorado, and they have Rio Tinto East, which is the green, and they have Masa Valverde, which is the orange. And they also have these two areas, which is barely visible, between Cerro Colorado and Rio Tinto, and surrounding them in the blue areas are other mining companies. So this is the Cerro Colorado itself, and you'll see that to the left is San Dionisio and to the right is San Antonio, and these are not just pure copper but copper zinc. So San Antonio actually has very good copper concentrations: 1.7% copper, 2.1% zinc, 1% lead, plus some silver and a little bit of gold. San Dionisio has 0.7% copper, 0.9% zinc, but both of those are in the exploration stage. So we are some way from development. So this is of the Q3 operational update on the 13th of October. Work is ongoing on the preparation of a technical report, and they'd be aiming to develop San Dionisio as an open pit and some underground mining. Now, the big one they have been talking about is Masa Valverde. They'd be aiming to truck the ore from Masa Valverde to processing at the Cerro Colorado site. And it's big, 66 million tons at 2.5% copper, but it's deep. So this is from the Q3 update, positive drilling results. And they decided to expand their drilling campaign, But when we look at the drilling results, you'll see that the mineralization starts at depth. So the best grades they're getting, 1.99% copper, that is between 478 and 486 meters down. So, that's not an open pit, that's a mine. And with all the complexities and permitting problems that you would expect for an underground mine. So Rio Tinto East, it's very early days, frankly. Okay, briefly going back to the ELIX system. So they have built and operated a 5 tons per day pilot plant at Rio Tinto. Now, what does that mean? That can't be 5 tons per day of copper. It must be 5 tons per day of ore. Now, Rio Tinto produces about 40,000 tons per day of ore, and it produces 15 million tons per annum. So we're not quite sure what that metric is, but if it's only 5 tons per day out of 40,000, they're not really processing very much, and they would have to massively rescale to get to processing all the ore they produce. And as of the operational update, feasibility study for the construction of an industrial plant has shown results and are very encouraging. They're undergoing a process of iterative optimization with the aim of constructing a phased industrial plant. So that presumably will require a great deal of capital and maybe some way away. And going on to ESG, well, they have they're evaluating the construction of a 50 megawatt solar plant to power Rio Tinto, and currently looking at financing, and that would reduce their electricity costs by up to 30% and reduce their carbon footprint. Now, the tailings facility, this is a picture of the tailings facility, and you can see it is enormous and frankly rather ugly, and you probably wouldn't want one in your backyard, and you can understand why environmental groups oppose the development of these big mines. But everyone really wants the green energy transition, but they don't want anyone to mine copper. It doesn't work like that. Everyone wants the copper to come magically from the DRC, where nobody has to see the environmental damage being done. And their new water treatment plant, a tailings thickener, which would reduce the size of the tailings management facility, and a dust control system, which looks like something out of a movie. Okay, moving on to Toro, which is their development project up north. And Galicia, unlike the south, is quite green. Get a lot of rain up there. And so how willing are they going to be to see a massive mine and all the disruption? The answer, well, they refused the environmental impact report. So it's back to the drawing board. And what Atalaya are now proposing, you can see bottom right here, is that they would restore the mine and put in, fields and forest at the end. So let's see how that goes.
It looks very pretty.
Yeah. Well, the trouble with all of these is is enforcement of the restatement of the mine, because at the end, there's no economic incentive to do the restoration. You've made all the money. Now you've just got expense. So how can the local authority ensure that the restoration happens?
And of course, it's not just the restoration, is it? It's if they're local communities, it's the upset, the disruption, the pollution to their daily lives, and that's one of the big issues, I think, as well. Not just how it looks after it's all been extracted and gone away.
Absolutely. But the thing is, Richard, we absolutely need copper. And, if we are going to reduce our fossil fuel consumption, then we really need to find a way of permitting all these big copper projects.
We do. That or room temperature superconductors, Keith.
Well, that as well. Fusion power.
Yes.
Okay, so these are Q3 21 results, and you'll see that there was a small dip in production, but long-term production forecasts were maintained, and they're aiming to produce 55,000 tons of copper in 2021. Copper recovery rates look good, stable, and actually rising slightly in copper production. It's fine. Now, they have repaid all their debt and now cash positive, and hence they paid their first dividend. And because of high copper prices, revenues and EBITDA have absolutely leapt this year. You know, they're doubled from last year. And Atalaya, in their presentation, make quite a big thing of the fact their shares are undervalued relative to their peers. So if we look at enterprise value over EBITDA, they are 2.8 times, whereas Central Asian Metals, which is another company I own, on 4.5 times. And on free cash flow, they've got a cash flow yield of 19%, whereas Central Asian Metals are at 14%. Taseko Mines, which I also own, is at 7%. So shares look good value, but let's do our own calculation. Okay, so what the assumptions I've made are, we're seeing inflation everywhere, as viewers of our weekly will be aware of. So I've assumed cost inflation of 10%. I've assumed that spot sterling and USD prices are unchanged over the whole of next year. Copper price is $4.50 a pound, which is slightly up from where we are. And annual copper production is 55,000 tons, which is mid-range. They're guiding for this year to 54 to 56, and I'm assuming they maintain that next year. Now, in looking through the Q3 results, they have copper contained in the concentrate and usable copper. And the usable copper is about 6% less. So I'm assuming that's just because of they don't get all the copper out of the concentrate. So I'm saying that's you're getting 94% of usable copper. And then nowhere do any of these copper mines actually declare what their smelter royalty costs are. But using their declared copper price and their declared copper production post the usable copper from the concentrate, you can back it out. And I think it's about 6%. I've then also used a tax rate of 25%. Now, the Spanish tax rate is 25%. The Cypriot tax rate is a whole mess. And they've got special defense taxes, etc., etc. Anyone interested should go into the company accounts, note 11. But I'm going to assume just the blended rate of 25% for Spain. Okay, and if we do all that, I get an implied P ratio next year of 4.9. Now, I will post the spreadsheet I used to our Discord channel. Anyone is welcome to have a play around. And this year, so just 2 weeks ago, they announced inaugural dividend of 29p, which is equivalent to 7.3%, which is fantastic. And henceforth, they're going to be paying between 30 and 50% of free cash flow. And that would put them on a dividend yield of between 6 and 10%, assuming they have the economics in the calculation we've just done. Now, the reason they have only just paid a dividend is because of the Astor litigation we mentioned earlier in the podcast. Atalaya have fully repaid the Astor loan, but Astor are litigating over interest, and that claim remains live, but Atalaya have put the 15 million euros under contention into an escrow account and have been allowed, therefore, to pay dividends out of the rest. And this is the historic numbers out of Stockopedia. You can see the big leap in revenues over the last couple of years, in 2021 and 2022 on the back of rising copper prices. But the mine has been actually profitable throughout at a cash flow level as well. Okay, so positives. Well, the reason we're interested in this is that we like copper, and that the countries of the world are all committed to the green energy transition. And Biden is attempting to pass a $1.75 trillion infrastructure bill, part of which will go to the energy transition, and all of that requires vast amounts of copper. So the long-term outlook for copper is very positive. I think I like management. They seem very straightforward, and actually they have delivered the expansion of production at the Cerro Colorado mine very well, on time and on budget. They've also extended the life of that mine so that it remains 12 years, and they have expansion opportunities nearby, but all those will require permitting. They're now at the exploration stage, and there is nearby expansion possibility at Masa Valverde, but as we've described, that's deep. And the Elix system, which seems rather opaque, we don't know very much about it, but if they can get it working and they can start producing copper cathode on site, that could be a big win. You get rid of the smelter royalty, which we estimate at 6%, and also you don't have to truck all the concentrate 75 kilometers, which also cuts costs and cuts down on the environmental impact. And there's also the Toro mine up north, which if they can get the environmental assessment fixed, then that's a good opportunity, because that is a big resource and actually quite copper rich. And the shares look cheap, is the fundamental bottom line. Negatives. Well, the negatives are that it's in Spain, and in Europe, essentially nobody likes to have these big mining projects near them. So you have local environmental groups are going to fight everything. And despite the fact that the Cerro Colorado mine was in operation, you saw that local environmental groups were trying to get the environmental permit closed down as recently as a couple of years ago. So you can expect just constant battles in the court to get any development done. And the Toro mine is an example of that. Also, Masa Valverde is deep. You're really talking about the beginning of the mineralization at 350 meters down, and the main core of the ore body at 450 to 500 meters down. That is going to be a very expensive development, and it's going to produce a lot of tailings, and the tailings are going to produce a lot of environmental impact, which is not going to be very popular. Now, also, they're incorporated in Cyprus, and Cyprus imposes a special defense tax of 17% on dividends, plus also the national health system contribution of 2.65%, i.e. there's the best part of extra 20% special taxes on dividends. And we've seen that medium term, they are looking to relocate headquarters to the UK and move their main listing to the main market. But right now, it seems that the corporate structure is very tax inefficient, and apparently you can get around these special taxes by filling in the appropriate forms. But if anyone knows anything further about this, please get in touch on our Discord, because there's some confusion and it would be nice to get clarity. So bottom line is, I like it. I don't think it's a multi-bagger. I think it is a good, stable business, dividend payer with exposure to the copper price. Richard, your thoughts?
Thanks very much, Keith, for your, as ever, a detailed explanation of the business. And I agree with your sort of final summary that it seems like it's a a stable copper producer that is effectively its profits will fluctuate with the price of copper unless and until it achieves one of these permitting that it's has out there. And of course, then there's the capital cost and the NPVs of the mines and so forth, which we don't know. I suppose my only concern with it is if it really can't get its permitting sorted out, it becomes a business with a finite life, which is 12 years. I know it was 12 years 5 years ago, but at some point it will be 12 years, and it's paying out a dividend of 7%, 8%, which over the course of 12 years is 100% of the share capital of the business. So the problem has to be that whilst they have a bit of time, in a few years' time, if they haven't got their permitting moving on and they're not, it doesn't look like they're going to be able to project reasonable quantities of production out into the future, they effectively are a business that is slowly closing down. Now, I don't say that's a management issue. That is an environmental an issue that relates to the environment in which they're operating. And I say that is probably the only risk that I can see that relates to this company.
Yeah, no, I agree. But when you say it's not an issue for the company, I mean, I completely agree. It's an issue that we in Europe need to get sorted out because, you know, we can't rely on copper magically appearing and just exporting the environmental disruption associated with copper mining to jurisdictions in Africa, which we frankly just don't care about. We have to, yeah.
There's a great deal of wishful thinking in amongst politicians, isn't there, with this environmental problem, is that they wish we could stop burning coal and oil, and they wish that we had a lot of electricity, but they don't actually know how we're going to get there. I'd also wish that we didn't have the mines and we didn't have the environmental destruction, as we all do. You know, nobody wants to have a big mine in an area of natural beauty and so forth. So it is a real conundrum that we need to resolve. And I know I talked about room temperature superconductors slightly facetiously, but actually I am beginning to wonder that whether we need a step change in technology to be able to solve this problem properly.
Yeah. Well, that could well be true, Richard. But, you know, predicting step changes is pretty much impossible. And if we don't get them, the alternative is just we keep on burning coal and oil and gas. And, you know.
And that's not good, is it? We don't want that.
Yeah.
So something has to break, doesn't it? At some point, something has to snap, and people have, in terms of what people are prepared to accept.
Yeah.
And in this case, you know, will the Spanish government say we have to have this copper? We're going to become resource nationalists. We want the copper for ourselves first.
Well, you'd hope so. You'd hope at some stage that something concentrates the minds of politicians, and they decide that actually we need to have these mines. But you've seen that Berkeley Energia have a uranium mine they have been battling away with the Spanish government with for years. And we all know that actually one of the big solutions to the climate emergency would be a big growth in nuclear power. But it looks like the Spanish government are going to refuse the permitting on the uranium mine and processing facility. And, you know, so rationality does not yet come into it, I'm afraid.
And the question, I guess, really is if or when will rationality come into it? And I don't know the answer. I think there are too many people with too much of a vested interest in their political well-being to actually stand up and start talking about what is really necessary to happen. And that's why I'm a little bit cynical about the COP26, not because I don't think it's a good thing to do, but because I think in reality, our politicians aren't of the standard that we require in order to make these things happen across the board, not just in the UK, everywhere.
Well, I agree with that. And on that cheery note, actually, sorry, Richard. Yeah. So, what are your thoughts on Atalaya? Do you a buyer, or what are your thoughts?
Yeah, I would definitely, if I had some spare capital at the moment, which I don't at the moment, I would definitely consider buying them. They look safe, solid, good dividend yield, as you say, and I suspect that their 12-year mine life will continue to extend over. But So yes, I would definitely, if I had some money to invest in copper, I would definitely consider them.
Great. Okay. Thank you very much. Well, thank you all for watching. If you have you've just come to the Portfolio Matters channel for the first time, we'd encourage you to watch some other videos and watch the weekly macroeconomic update. In the meantime, please can you press like and subscribe to the channel. And it's goodbye from Richard Wheater.
And it's goodbye from Keith Jordan. Goodbye.
Goodbye.
Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only and should not be relied upon for making a business, legal or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website or to any information, products, services or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information, nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.